Okay, so NIO, the Chinese-based EV startup, have just announced their Q2 earnings, and they provided a double beat. The startup lost 0.42 yuan per share in the second quarter, which is less than the 0.68 yuan expected, and it was significantly narrower than the 1.15 yuan they lost in the same period last year, which is Q2 2020, as expected during the pandemic. Now, revenue surged 127% year on year. So they achieved 8.45 billion yuan, which was more than the 8.32 expected. So double beat there on earnings per share and on revenue. Now, they forecast revenues for the third quarter to be between 8.91 billion and 9.63 billion. So a rise of 112%. Okay, from the same quarter of 2020. So that's good. They've upped their estimates for Q3, which is great. Now, they said that they delivered 21,896 vehicles in second quarter, and they forecast that they would deliver between 23,000 and 25,000 in Q3. Let's take a quick look through their filings, see if we can find any nuggets of information in here. So you can see their deliveries have gone up. So we can see the growth here. Let's start from, you can see they've gone a steady increase there, a big jump from Q1 to Q2 of 2020 in deliveries. And then it kind of stayed a bit steady, increased, and then not a massive increase versus Q1, but decent. Now, the worrying thing here is in July, they've announced that they've delivered 7,900 vehicles. So if we were to assume the pandemic situation doesn't get any worse, then that's on track for about 24 if they repeated that each month. Now, that is less than both Li Auto and NIO, China. So, yeah. So that is a bit of a concern there. Let's have a look at the figures here. So we can see that the vehicle margin has now returned back to a sensible level at 20%. We had that dip in Q2 2020 where it was very low, but we're now back to the level we were at before, from Q1. So Q1 and Q2 now trading at a healthy 20% margin, which is very good. This is what I was talking about there. So NIO delivered 7,900 vehicles in July, representing a strong 120% growth year on year. Fine. And that makes up cumulative deliveries of ES8, ES6, EC6, in total 125,000 vehicles as of July. Okay, so that's the total. Renewal of joint manufacturing arrangements, extraordinary general meeting. It's fine. CEO notes, we achieved a record quarterly delivery of 21,896 vehicles in the second quarter, followed by 7,900 vehicles during the cumulative deliveries to 125,000 as of July. That's William Bin Li, the founder. While the global supply chain still faces uncertainties, we have been working closely with our partners to improve the overall supply chain production capacity. Encouraged by the growing user demand, we remain committed to further expanding our power network, increasing our services and sales coverage, and more importantly, accelerating our product and technology development. It's a very good sentence, huh? This is what I wanted to pick up. So we aim to deliver 3 new products, which is really exciting. So they want to introduce 3 new products in 2022, one being the flagship ET7, which we've heard about, which is their electric sedan. So really looking forward to seeing this and how this competes, because at the moment they've been doing well on the SUVs. I wonder if they can penetrate the sedan market, which is going to be more important for them when exporting to the West. Driven by another record high quarterly deliveries, we have achieved solid financial performance with vehicle margin and gross margin reaching 20.3% and 18% respectively. As we expand our horizon to more markets, we will continue to make decisive investments in product and core. Fine. So yeah, just to recap, so they did 1.3 billion in revenue, which is an increase of 127% on 2020. Vehicle sales went up. Cost of sales have been sensible. Operating expenses, let's have a look just to make sure they're not overspending on any of these. In the second quarter of 2021, it was 136 million, representing an increase of 62% from the second quarter of 2020 and an increase of 28.7% from the first quarter. Okay, that's interesting. That's a very big increase from Q1. So I'd want to look into what that was on a deeper dive. to increase by 30% your research and development expenses. Whether this is then preparing for the 3 new models, which they're doing some upfront research and development into, that could easily be those 3 and the ET7. Was mainly attributed to the incremental design and development costs for new products. Oh, there you go. I should have just finished the paragraph. Okay, so the SG&A in the second quarter, 232 million, represents an increase of 59% from second quarter of 2020, increase of 25% 2021. Again, high. So higher SG&As. Let's see what this is. The increase over the first quarter was primarily due to increased marketing promotional activities. Okay, fine. So so they've got a 25% increase in SG&A, and revenue for that period, total revenue for that period increased by, let's do the math. So they went from there to 7,982. Yeah, so that's a bit worrying. So they increased revenues by 5-6% there in the quarter, but they've spent a lot of money to do that. Okay, so something we need to keep an eye on just to make sure that is sensible. Let's keep an eye. Let's have a look at their cash. So they got 38 billion there in cash. Total current assets 46, and okay, and their total liabilities 13. Perfect. So they've got at least a 3-4x there ratio, which is good. And on the total assets, total liabilities, they've at least got a double. Okay, so they're comfortable there in terms of cash, which is important for cars. Not quite Tesla level, but they're all right. Anything here? That's the full breakdown. Yeah, so I was going from left to right. They do it differently this way, don't they? So you can see that this one was the 3 months ended March, so that's Q1 this year, and that's Q2. So you can see that's the increase. And they've just put it in dollars for us very kindly, just to make it a bit easier for us. So we can see that's the growth, and the final net loss has gone from 451 to 587 million RMB, which is about 90 million US dollars. Okay, so we're getting there. Overall, good earnings from NIO. I think, look, the key with NIO is going to be they've got to get the cars off the production belt. They've got to keep innovating in terms of products. It's good to see that they're introducing 3 new products, which is really important. They've got to keep pace with Li Auto and the other Chinese players, because there's quite a lot of them in the space trying to compete with them. They've got a head start. They've got the branding. They've got good traction. They just need to keep that up. And the other interesting thing here, which we've not mentioned this whole video, is the battery swapping technology. NIO has a unique aspect in terms of, they're really focused on this battery swapping technology, and I think this could really push them into the forefront. Because for those who don't know, you can park up your NIO and go to special service stations, and it'll basically just take out your old battery and they put in a new one, and it's done in a couple of minutes, just as if you were filling up fuel. So you don't have to wait 30 minutes like the traditional Tesla. Now, whether that can work in the Western world, because I do know from a few videos that I've watched that you need some staff to man these swap stations. Would that be feasible here in the UK? NIO would have to pay, minimum wages here in the UK or US for staff to man the stations. Would that be feasible? I know they also do it like an office service where you press the app and the van comes to your office. Make sure your car's charged when you leave the office is charged. Really interesting innovation in the space. At least they're doing something different instead of just copying Tesla. So it'll be really interesting to see how that progresses over the next couple of years. So there you have it, guys. A double beat, but we're still down 3 to 4% at the time of recording on NIO. And we'll see you in the next one.